Well, that's a great question. How do I get started investing? We hear that a lot, and sometimes I think we talk about so many principles and things that we skip over that. It's not an easy question to answer, but let's delve into it and answer it, because if somebody's just looking to invest, we'll go through a couple of scenarios, but if somebody's just looking to invest, there's a couple of different ways, some things that I'll talk about. Dr. Crum can talk about where and how you can do that. A lot of times it depends on a person's philosophy. There's different ways. There's active, there's passive. It depends on how much time, liquidity. So when giving financial advice to somebody, those are things that you have to, and probably the reason that many times we don't answer that question, because we need to know liquidity, we need to know your age, we need to know your risk analysis and what is your threshold. But we're going to give some generic advice and ways to do that, because one thing that we say all the time, just get investing. There's places like Robinhood now, Acorn, that these online mobile platforms that people can put, I think, as little as $5, $10, $15 in. If you can't do anything else, do that. We're not fans of them because they are higher fees than you recognize. The fees look small because the amounts are small, but in comparison, they're pretty high fees. But if it gets you investing, I'm a fan of it. So anything that can get you investing. So let me just give you a couple of just very generic places and things that you can do to open up accounts. If you look online, they list some of these. There are companies and corporations and places that look at different accounts. TD Ameritrade is really considered by many the best overall for just beginners. It's a very simple platform. It'll allow you to buy stock. The fees, there's no free trading fees on many of them, but you can do research. But you have TD Ameritrade. Fidelity is good for their research. Charles Schwab's good for IRA accounts. They all kind of have their strengths. But if you Google any of those and you find them, it'll kind of tell you what their strengths are. So, some of them have no fees for trading. Some of them have smaller amounts to open accounts. Some of them are 200, some of them 500. They give you credits back. But the best way to get started is to do that and look online. And then if you can get involved, they've got some research tools. And the great thing is that it's a great way to learn. You can invest a little bit in some stocks and get involved. Now, that's not necessarily what we would call your retirement account, but it gets you investing, it gets you moving towards something, and it's a great beginning. And doing something is better than nothing, because zero compounded is, yes, zero. So if we can get $1, a quarter, something invested. So our real push and passion is to get you invested. So just by way of introduction, you can Google, look at TD Ameritrade, Fidelity, Charles Schwab, there's E-Trade, Interactive Brokers. There's a lot of them out there that you'll find. And kind of look at the best one that'll fit what you're trying to do, if it's fees, if it's the amount, and you can get started. Because the thing is, you can start investing and get going, and you can always move to something else. I don't think you need a financial advisor to start investing money. That many times can create other fees. Now, because the industry's changed so much, you can do that online. So to get started doing something, just look at those and get started. You probably want to add a lot to that.
I think you've done a good job. Thank you, Don, for that answer. I think that sometimes people have an interest in knowing about the stock market, and they don't know how to learn about it. And you can read about it.
That's right.
But there's two things you can do, and I know I did this many years ago. I joined an investment club, and you meet once a month, and you invest a certain amount of money, but you select a stock, and usually some of those that are in the club are very good at trading stock, and they will explain to you all the guidelines, and so you can learn that way. Now, some of them have very good track records, and some of them don't, but it's a learning process. Another one that's a little more basic, if you want to learn investing, I'd get you some monopoly money, play money, and actually go into the market with your play money. For usually it will test you on two things. Will you get bored?
Yeah.
You can get bored very easily because it's not real money. But you will learn by your own little track record of how well I did when I invested in this stock. And I have so much money, maybe, like say use monopoly money,
Yeah.
and track it for 3 months to 6 months. You'll learn a great deal, and you will find out. We don't necessarily, neither of us advise people to invest directly in the market,
Right.
usually.
Right.
I mean, there's seasons when almost anything you invest in is going to go up,
Yeah.
if it doesn't go under,
Yeah, that's right.
like now. And what if you'd have bought, Clorox? Who would have thought?
Yeah.
But it's a supply and demand market. So those are some basics that you can do, or you can again find somebody who does invest in mutual funds or in accounts and partner with them.
Yeah. Yeah.
Those are just simple ways that people can get started.
Yeah, as far as, and you bring a great point. There's, first of all, a lot of these trading platforms that I mentioned that you can invest in have interactive things that you can literally take $1 million and invest it of play money, and you're learning, you're growing. What would you do? What would you buy? It's a great way to learn without the pain. We used to say learning to shave on somebody else's face. You don't feel the nicks and cuts, and play money. That's a great way to do it. But just to get involved, whether it's a mutual fund that you find for a small amount that you can put into, the thing that we always tell people is when you start investing in something, and mutual funds are good for smaller investors because they're pooled money. It gives you a little bit of diversity at a smaller amount. That's what they're designed for. They do have higher fees. I'm not a fan of them. But for smaller investors, get it started. You can always move to other things, but get started and build a discipline. And the thing is, once you start, put in set intervals. You're not gambling. You're not going after hot dots here, okay? That's what we don't want you to do. We're not giving you advice to try to find the hot dots. I don't believe you can do that. I don't believe anybody in the world's that good. If they were, we wouldn't know about them. They'd be retired on an island. So what we're saying is that you want to be wise, invest, diversify, and do it in intervals. If you're going to do it every month. Try to get it every month that you're investing, because it's going to make you an investor. It's going to make you think different. You're going to learn. Every month you're going to learn through some of that. So you want to do it regularly as you do it, not just a one time. Try to take $5, $10, $15, $20, $50, $100, what you can, and begin to invest, because it'll change something in you.
Let me repeat my 3 principles of investing. Number one, be sure that when you invest, you can leave the money. You don't need it immediately, because you can't really time the market that well. Number 2, be willing to lose money if you invest. Doesn't mean you'll lose it all, but be willing to ride it out. And number 3, don't borrow money to invest.
That's right.
Unless you are a sophisticated leverage investor.
Yeah.
Be willing, as I used to say, be willing to lose it all. In other words, it's not money that I've got to have to live on. It's money that I can afford to lose. I don't want to lose it. I probably won't, but mentally I do. And there's nothing more inspiring than to see the investments growing as you systematically, as he has said, Don has said, put money in systematically. So go fishing.
That's right.